Trading can cause a lot of PTSD.
If it loses, it doesn't make you a bad guy, a bad trader, a bad investor. It doesn't mean that your financial future is doomed, right? It doesn't mean that you can't have success next week.
The idea is that if you're going to lose, you try to lose not too much. But if you're going to win, you try to get as much out of that win as you can.
I see so many people who, whether it be a copier, whether it be their own trades, whether it be like a stop loss, whether it be, regardless, all the things, they took a loss. They're so emotionally wrecked while they're in the trade or after it is done that, to me, my brain just does not relate at all. I don't know how else to say that. I give the glory to God because he wired me that way. But seriously, if I could help people see what he just talked about, if anybody wants to chime in, like, this is a huge topic. It's a big problem, I think, across the board in trading, which is people take a trade without doing all the analysis of, am I going to accept the risk, the good, bad, and the ugly that goes with this? And now they're worried. Now they're stressed. Now they're panicking. Now they're trying to get flat. Now they're unsure. They're second guessing. They're going through all these emotional, situations, et cetera, that they can't cope. And then even on top of that, to add one step further, they take a loss and it's catastrophic for them, whether it was the blown account, which is obviously bigger, or a single loss of the stop loss. Now they're second guessing their strategy. They're just all over the place mentally and emotionally. That topic to me is huge because for whatever reason, when I take my trades, I win some, I lose some. Some of it sucks. I mean, there's no way around that. But that's it. Like, it's okay. This one lost, or hey, this one was a glitch. Screen mirroring glitch yesterday caused a huge problem, and that's okay. It is what it is. Can't fix it. Can't undo it. But it is such a big deal. I'm telling you, if we can talk about that and implement that into our lives, particularly in trading, but to say, hey, look, going to the dentist, right? So we're going to get ourselves all worked up about it. We hate it, et cetera, et cetera. We do all this stuff emotionally versus saying, hey, I'm there for the outcome. I can get through this. And then you accept it. It takes away all of that feeling, all of the feeling that I think is causing so much catastrophe in people's lives. And I think it's one of the biggest reasons people are losing across the board. It's huge. When you hear it, it sounds like so sensible, like duh, but it's really what we do. We just explain where I'm at. But let's talk about it. Why is that the case? Now, I'm not much for gambling, but I mean, we all know that trading is very related to gambling. You place your trade and now you're going to second guess it. Now you're going to do that versus all the data you need to make. You're doing it beforehand. And that means you're also accepting the stop loss. When you attach to something that's automated, you're accepting the outcome, the good and the bad. And sometimes it's a sucky outcome. There's no way around it. Why are we not doing that more often? And I think if we did, the paychecks bi-weekly or weekly and monthly, I think they'd be much different.
I think that what you said there, that trading is like gambling, I'd say that it's exactly the same as gambling. There are games in which you have discernible odds in different situations, and there are games in which you have no odds that you can discern. And understanding where your odds lie is the key to learning to trade. Understand to think in probabilities. So, given certain situations, let's say bouncing off of a support or resistance line, you have a fairly high likelihood that you're going to get a bounce. The degree of the bounce is a different story altogether, but you have a better than 50-50 odds of you bouncing. And time and experience will start to give you an idea of what those odds are. There is a book called Encyclopedia of Chart Patterns. It's an expensive buy. I think that a hard copy used is running around $50 or $60. But in that is a whole bunch of chart patterns, and it tells you what the odds are of the pattern producing results that you're looking for. Then if you're going to trade one thing, one pattern, you start to deeply understand the odds. I've heard several traders refer to the idea is that about the best you can do for your odds is around 60 or 40%. 60% you're going to win, 40% you're going to lose is about the best you're going to do. That's what they believe. But again, that is based on what they know from how they trade. But it is never 95% or 100%. They're accepting that they're going to lose a portion. And the idea is that If you're going to lose, you try to lose not too much. But if you're going to win, you try to get as much out of that win as you can.
That maybe a book worth getting. You also mentioned the degree of the bounce is a different story, but to me, that's also part of the probability. So are you going to get a reaction? Yeah, you got one, but it wasn't enough of one to profit from. That's all part of the equation, guys. Like it's all part of it. And we have to find a way to cope with that. And if I could teach the piece and the good and the bad, and no, not every day is good. Yes, I'm pretty good at this field. Most of my days are good. There are far more good ones than bad, but I still have bad days that are just, and I don't even classify them as bad days. We'll call them losing days because I net lost. That's okay. Like that's part of the equation. But if I could somehow help people see, wait, you're going to make your decision. You're going to take the signal. You're going to take your own analysis. You're going to take the copy. You're going to take the whatever. You're watching, the YouTube of whatever. You're going to take it or you're not. You're going to trust the harmonic or the fair value gap or the golden strategy or the Ichimoku or not. You're going to have your management in place. It's all right if it loses. It doesn't make you a bad guy, a bad trader, a bad investor. It doesn't mean that your financial future is doomed, right? It doesn't mean that you can't have success next week. It's part of it. If we can somehow stop hyperfixating on the losses, the blown accounts, the net negative aspects of this industry, I think net positivity, profitability, and probabilities, I think will all go up like by a lot. But there's just little nuggets like that some things are taught, some things are caught. So anybody else want to chime in? Sandra, you said I hear it. It sounds like a duh, but we do it all the time.
Trading too can cause a lot of PTSD because, it just depends, what's happened to you in the past and your experiences with trading, because there's a lot of traders that they may go on a hot streak and then all of a sudden they just, crumble. There may have been one loss that went adversely against you. And then after that, you may have had the full confidence and then the fear starts coming back in. And it's trying to gain that momentum up. But then, you may go on the streak because of everything is probabilities. Your system may not be working right now to its best efficiency in the environment that you're in. So you're going through the series of losses as opposed to the probabilities. And it just depends how comfortable you are with your system, how long you've been training for. So you do know that the outcome and the numbers will eventually work into your favor. But if you're taking 5 losses in a row, or if you have like 2 or 3 consecutive months of being in the negative, then that can be tough to get back and have the courage or gumption to continue taking the trades, continue shooting. And then sometimes too, the other things is just like when you are in that slump, sizing down or going back to demo to get your confidence back and then, scaling back up gradually with your sizes. So there's so many different things. And that's part of like what you just showed in that book, Jenny. There's so many different ways. It's just a matter of finally hearing it, where it makes sense to you and you can sort of incorporate that into your daily trading and your daily habits and your daily discipline, which is why the trading in the zone, ultimately, Mark Douglas says the same thing. It really is the cheat code. However, as simplistic as it is, it's not as easy to go in and physically exercise. But if you do practice this exercise and, look at it over and over again until you find a way that you can do that exercise that will work for you, that's eventually when we'll come up and get the consistency that you're looking at.
That's great. You said a couple of things. Gosh, I don't want to miss any of them, but so many. PTSD, let's start with that one. I do. I think people obviously we know FOMO, but the PTSD aspect, the traumatized aspect of it, I think that emotional response is also limiting and inhibiting future performance, right? It's really, really impacting the things you do today that mitigate some of what could have been wins, okay, and definitely enhance what our losses, right? And that's such a problem until we work on the psychological aspect, which we know Mark Douglas's book is mostly, there's not a lot in there about trading or a zone, like the whole book. It's mostly about the headspace, which I think is awesome because that's what trading is. But no one wants a class, on the headspace. Or not enough people do, but it really is the difference. It's just the headspace. And there was a couple other things you said. You said sizing down or going to demo. I'm a big advocate of sizing down. We know what demo dollars feel like. And I think I think that feeds to some of the emotional disillusionment. Okay. If that's a word. When you go to demo and then start performing well, And of course it was demo. That's, I think, emotionally hard for some people. So they took all these losses in live. They go to demo, and of course they made the million. Their 7-figure account. For some reason, they're trading a 7-figure demo account. And I think that also is psychologically a little bit damaging or wounding. So maybe consider sizing down on live money if it's possible for you. Just size down. Go to the very minimal amount of lot size. And in that case, it might not be worthwhile to trade US 30. Or maybe go to M1C or Plexi. They do lower lot sizes on those instruments. So just something to think about. Size down. But decide how you're going to work on that part. Because if that is still bugging you, it says a lot about where you're at. And that's not Jenny's opinion. If you're still sincerely wounded at your losses and your blows to a, decently emotionally reactive level, that's something inside of you that maybe needs some addressing. And I want to bring it up because whatever happens with Six Figure Trading Coach or the future or whatever, this is, our legacy. So this is a chance to make an impact in people's lives. And I know that this one topic is going to be the bigger one. It's bigger than the winning trade. It's bigger than the running spreadsheet that says, hey, look, we can do this. That's nice too. But it's bigger than all of it because this is where it's at, guys. If you're still struggling that dramatically, obviously we can hear Scott's voice in the back of our head saying size down. You're over risking, right? I can hear that even in my head. Saying, hey, if you're blowing accounts left and right, you're probably trading too big for too small of an account. You're undercapitalized. You're over leveraging. If you're losing more often than you're winning, you're likely not being consistent, right? There's some things to work on, but all of it still starts with the head. It all starts there.